What's up everybody, Tom here with another video. In today's video, we're talking about everything to do with the markets right now. The Nasdaq just popped to an all-time high and it wasn't even close, another 1% followed by a 1% day. We've also got big records coming on the S&P 500, key resistances being found across major indices, and a possible tasty dip coming up because of these rapid moves. Stay tuned guys, this is going to be a good one. All right, everybody. Well, here begins our video for the markets, of course, closed 4th of November, 2021. And when we take a look at a heat map here, you'll notice certain sectors were certainly outperforming others. Microsoft, Google, Amazon, Tesla, all doing very well. Apple, a little flat after, of course, its big breakout past 150 resistance, and Nvidia, the standout of the day, 12% up, was even higher at one point, absolutely blew it out. Semiconductors doing incredibly well for the session, and it's amazing to see. We will cover Amazon, Tesla, Apple a little bit further through this video, along with our technical analysis for the S&P 500, IWM, Russell 2000, and Nasdaq. But firstly, let's just quickly talk about these banks. So all the banks were down after the Fed news. Now, main reason is because the US 10-year actually dropped. And of course, that's bad for banks' profits. And that's why we were seeing some depressed prices throughout the banks. That kept down basically things like the Dow Jones, banks, energy, OPEC coming out and saying that they were going to keep the barrel in expectations, about 400 million barrels or something like that. That means that we get the lower oil price, which of course puts pressure on the Dow as well. So that's why that's down. Russell 2000 suffered a little bit from the finance side, but not the other smaller companies, because there are about 20% of the Russell is financials. And then we had the S&P 500, 0.46%, and the Nasdaq, massive standout here, 1.23%, smashing into its R1 pivot we'll look at soon. So technology was the best for the day. Then we had XLY, consumer discretionary, continues its incredible run into its seasonal part of the year. We had industrials doing okay, and bringing up the back, we had financials, biotech, and of course, some of the other sectors, including energy and others. So it was a bit of a mixed result throughout some sessions. And of course, then it was all really in the Nasdaq itself in terms of gains. But let's have a look at earnings, beats, and misses. Now, we talk about earnings, beats, and misses like they're important because they are. Really, if as long as we have 70% plus beats, then we're looking at a pretty healthy fundamental environment. That's the way I at least see it. And we've still got that 73% beat rate, 1,018 beats, 376 misses during this earnings season so far, and it looks like Wall Street's pretty happy with the numbers, and that's why we continue to move forward. We just had the close of pretty much some super hyper stocks. We had Airbnb coming out with a pretty good result. It was up after hours. We had Peloton getting absolutely smashed. It was down 20%, I believe, after hours, because it just has bad guidance moving forward. And Cloudflare, while it reported stellar earnings, was not really going to probably ever live up to the exact expectation, so it was down as well. Square did okay, Pinterest is up after hours, and Uber lost on the Didi deal, so they had a share in that, and of course that wasn't looking good for them. So overall, again, in line with pretty much the stats. Peloton and all of these ones that did well during the pandemic crisis, all those pandemic stocks really seem to be struggling to turn it around. And it just shows that sometimes with hyper stocks, you need to be able to either read the price action, which has been negative for some time on that, or you need to really think about logically, will people purchase this? Will it continue to be a very strong business? Because remember, it's valued like it's growing at the same rate as it was during the pandemic. So always remember that, guys. Very tough to trade some of these hypers at the moment. But yeah, some are doing very well and some are doing a little bit poorly. So now we bring ourselves to the CSNAX data, and so far everything pretty much is standing true to the first week of November. We get that initial sugar rush high, so then the question beggars to believe, what about next week? Remember, 12th of November is by average the pullback date. So if we're thinking that, and we're thinking that maybe we're hitting these kind of a little bit too much euphoria, a little bit too much greed at the moment in the markets, will we have a little bit of a tasty dip before our back end November Christmas rally? And I'm starting to think, yes, we may. What do you guys think in the comments down below? Let's just refresh this now and see where our greed rating is. Still sitting at around an 82, probably hasn't fully updated, but the greed is certainly on the high scale of things. And we've been using this fear greed index for quite some time to get a bit of an idea of when we need to be careful in markets and when we need to be, of course, very greedy in markets. When the fear is high, we want to be greedy. And as Buffett says, of course, when others are greedy, you want to be potentially fearful. I don't think it's about being fearful right now, but I think it's about being realistic in the markets. And that's something we'll continue to look at. Put call ratio is still very low. As we know, 0.4 coming down to that 0.4 means less puts are being opened, which opens the idea to more of a potential little bit of a pullback in the markets. Breadth has been increasing, which is a good thing for, of course, the markets overall. And stock price strength is improving here with a lot hitting 52-week highs. But this oscillator down here usually shows us a little bit about markets getting a little bit too extreme. When we crack past 80, we do enter extreme greed periods, and they have tended to be coincided with small dips in the markets. Not so much correction periods, but more small dips. So let's get into the technical analysis, and we'll start here with the PCC ratio. It's sitting underneath 0.7. We use this as a contrarian indicator here on the channel. And what that really is telling us is it's saying, okay, if the puts are low in the market, there's more chance that there could be actually a pullback. And that's because Wall Street like to, of course, pay out as little as possible in terms of the options. We only get about 70% of options expiring worth something. And if there's a huge amount of calls being opened in comparison to the puts, what's more likely to happen? A little bit of a decline. So we're getting to that stage again, and the technicals are going to show us that reasoning. Let's start off with US oil before we go into the indices and the major stocks. And US oil continuing to do what we thought it might do, which is a pullback here in the markets. Basically, we have previous resistances around $77. This is a key resistance zone, and certainly a point that we've been watching for quite some time. We noticed the breakout. We obviously targeted the 86. Now we're targeting it to pull back to this zone and hopefully consolidate around this area. We're not sure where it's going to consolidate yet, but with OPEC's new deal, 400 million barrels or something like that, we're going to see it come back down into this area and find at least some type of buying pressure, we would hope, or consolidation period. So US oil continues its weakness at this stage. Another thing that we're looking at is, of course, the stocks, and things like Tesla have managed to just continuously go up and up and up. And a lot of people have been messaging me, Tom, where do you think this thing stops? Look, if I knew, I'd be a genius more than we are already on this channel. But the way that we're thinking about it is probably just following the trend, following the moving averages. We don't know exactly where Tesla can stop. We've got 20 moving average here as being the bounce levels in the past, and we still haven't even come back and tested that yet. So that's going to be something that we'll watch throughout the next coming weeks. If you're still in it, congratulations to you. We don't know where the top is. It could be 1,300, could be 1,400, could be 1,500 before it has that consolidation. But we need to go back through the history and understand how Tesla moves to get a bigger idea of whether we should be scared as investors and traders. So as a trader, I think following it by the moving averages is probably going to be the best course of policy. But when things do turn around, e.g. when Tesla hit 500 over here after a huge rally, it did dip and consolidate for a while. It also then went on a monstrous rally up to that 888 area, consolidate, and then of course dip, and then took a while to recover. So I think what Tesla's well known for is really quick reprices, really fast moves, followed by consolidation, and then another big rally should the news hold up. And I think that's what we're seeing here again. Where does the rally stop? Is it 1,500? Is it 1,300? Is it 1,400? We don't know just yet. Continue to follow, watch the price action, and let it teach us a little bit about what's next in store for that stock. And we'll continue to cover it on the channel. Let's move over to Apple. Apple's still through 150. Obviously, dividend coming for this stock now. So that will be an interesting thing to see how it really deals with that. We do expect this closeout to be less explosive because of the dividend component, and hopefully can hold above around this 150 after the div, and then we can move forward in terms of that 165, 162.5 that a lot of people have as TP zones. Still very strong price action is currently happening on Apple. Just got to wait till this div comes out of it. And we know that creates sometimes a little bit of up down action like it did over here. So hopefully it just holds above 150 for now. Let's move over to another more exciting stock in the FANG, and that's going to be Amazon. Amazon's come to life in the last 2 days, guys. Look at this. Bullish, bullish. We've just closed marginally above that 34.70 area. And that's pretty damn important because we haven't seen a closure above this, and we're actually breaking through a downward trend line, at least marginally. So at this point, what have we really got? Well, we've got a lightning bolt on the smaller time frame, and now we've got a lightning bolt on the larger time frame. If we go over to something like a weekly, you're going to see a very strong price action here. Long leg doji, decision made. Long leg doji, what is in store for us on the Friday non-farms day? Because this zone here, resistance, resistance, closure through, weekly closure through, big deal, breaking down the downtrend, getting through the wicks. You guys know what that means. We could be looking at the seasonal for Amazon, and that's going to be a very interesting time because November historically has been quite strong for this stock after earnings, so that's out of the way, thank goodness. And now we can move to potentially moving that monstrous channel up. Now, here's the monstrous channel. We take the distance, we extrapolate that up. We got that false break in the past. Could we be hitting a 4,000? I would love to see what the comment section down below. Let us know what your thought process is for Amazon by the end of the year. Do you have a price target? Let us know very soon. Let's move over to IWM. Again, another one that we're looking for the weekly close here. Little bit of indecision after that nice breakout that's happened. We've still got a huge big channel breakout that could be happening over the next couple of weeks. I wouldn't mind it to come back down and then of course to rally back up, test the previous resistances from the top down. Role reversal is what we call it. The resistance becomes support. That would be great to have. We also do want to be watching the weekly very closely to make sure it closes. Now, ideally it would close around here because this is just a clean break. If it comes all the way back down and then closes here, not as good, guys. We don't really want that. So IWM flat on Friday is fine. Slightly down is probably okay as well, but we don't want it hugely down because we do not want it pulling back into this 234 section of the channel. We want it to be staying strong and proud on the way that it breaks out and that it continues on, hopefully, for that bigger gain. I think IWM Russell will be something we watch for the next coming weeks. Remember the seasonal, 80% positive during the months of November, followed by a pretty damn good December as well. It does make sense to the technical, and when seasonals and technicals come together, it can be a match made in heaven. Let's move over to the S&P 500. A lot of people wondering, when will this rally stop? It's been such a huge rally now. Almost every day of gains since we saw that lightning bolt movement up here and we went to the bullish side, and it's just been gain, 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 gain. What can we do? It just keeps gaining, and that's good, but it does mean that we'll probably have a bit of a dip that'll be bigger than you expect from a dip perspective. And what I mean is bigger is it really is most likely at least going to try to come back to the daily 20, if not the daily 50. And both of those are either 3% or 4% down. You might say, well, Tom, that's not very much. Look, it's probably all you're going to get from this current perspective. We do have the monthly R1 pivot up here. We've got our trend line with that. The S&P 500 always is the best indicator in terms of market overall sentiment because, of course, it's 500 companies. It shows a bigger health. More people use the technicals on this one. So this is around the area, about 4,710 is where we expect it to kind of have some problems. And if we go over to the NASDAQ and we check this out, the QQQ, the NASDAQ, you'll notice it's actually through the high. So if we move over to the QQQ for a second, look at that, right into that high and actually just hit the monthly R1. So is this it for the NASDAQ? I mean, this is now, let's just quickly get this. It is now 5%, almost 4.5% away from the daily 20 moving average. That's pretty high. As a percentage, it doesn't often go this far away. Let's just think about it over here. This is about 4% and it looks pretty fine. We go back through history. There's one that's pretty large. Let's see what that is as a percentage. So that moved about 5% away. There's one that's pretty far away. Let's have a look at that. That's about 6-ish% away. So when it gets this far away from the 20 moving average, I start to think, my spidey senses are tingling, and I start to think, okay, what stats do we have here? Well, we have the top end of the channel. We have a monthly R1, and we're very far away from the daily 20 moving average. Is it time for that early November pullback to start to occur? It certainly looks like it could be coming in the next 0.5%, 1% for the S&P 500, and the Nasdaq's just hit the top of the range. So I could expect some weakness here. Maybe it'll continue to blow up. I mean, the trend is still up, but this is certainly the zone that I watch. It's what I call the danger zone. And at this point, people may be scaling, people may be using different systems, obviously looking at all their different types of approaches to the market. But what do you guys think? Do you think this is the top for now? We get that dip down, hit the 20 or the 50, and then resume the trend? That would actually be a very healthy thing for the markets to do. A big slingshot up like this with no pullback is not ideal when you're looking at it. Before we talk about the big news ahead and the fact that the jobs numbers may be the catalyst for all of this, let's talk about the Ethereum, the Bitcoin markets, of course, crypto in general. We've seen a drop back in Bitcoin, which has hurt most of the alts and hurt most of the market at this stage. Ethereum's still staying very, very strong because its ratio is so good. FBTC, we saw the breakout the other day. Daily 20 still remains one of the important areas for people to look at for buying pressure if they are looking for dips in this. And Ethereum still remains much, much stronger than the likes of Bitcoin or the likes of some of the other coins at this stage. So Bitcoin's coming back down in consolidation. Fully expect it to do this. Ideally, it consolidates for another week or two, probably another week. And then if it comes through, it's actually moving very similar to 2017. So Bitcoin's consolidation shouldn't be seen as a bad thing. It's just making sure that price is solid. And remember, I've also said that if Bitcoin comes down to around that 54,000 area, I don't find that bad, because all I'm really looking at here is an A move, pullback, a B move, pullback, and then of course, hopefully our glorious C move later on this year. That would be fantastic to see in these markets. For the news ahead, we've got, of course, the unemployment, non-farm employment change details, unemployment rate in the US. This will be a big one. This also will dictate a little bit about what the market thinks to do with the Fed's long-term taper results, the market into the end of the year, all of these types of things. It's a big news event. Certainly be watching it. However, the market's going to do what it feels like anyway, is the way I believe in it. You know, we've hit a resistance on the Nasdaq. We're about to hit one on the S&P. If it's going to sell off, maybe this might be a catalyst. However, you know, we're not going to guess these types of things. If you look at the last non-farm employment changes, I think of the last 13 or something like that, 12 of them have ended positive or something. It's a very, very high number. So yes, non-farm employment change, while it is a volatile event, in general has been helping the market, but it can also be a catalyst for sell-off. So we're hitting resistance on the Nasdaq. Let's see what happens next. It's going to be an exciting time. Thanks so much, guys, for watching the video. If you enjoyed it, please remember to subscribe, smash that like button, and we'll see you in the next one. Bye for now.